Hi, I'm Ed Fulbright, CPA, CGMA, PFS of Fulbright Financial Consulting, PA. We would like to welcome you to our educational briefing.
If you're over 50 and managing your investments for retirement, you may want to forget everything you know about inflation. There's a growing school of thought that the financial economic conditions of your youth were an aberration in American history. Since peaking in February 1975, inflation has been in decline. The inflation benchmark shown is pegged against the Personal Consumption Expenditure Deflator, which is used by the Federal Reserve in setting interest rate policy. After topping 10% in February 1975, inflation plunged in 1976 and soared again in January 1981, and then began its steady 44-year descent. In continuing to drop since the last expansion, inflation is turning conventional economic wisdom on its head. Wages are rising, but it's not causing higher inflation, challenging economic models used by the Fed to fulfill its dual mandate to promote job growth and control inflation. This chart gives you an idea of the dramatic change in mindset on inflation. The red line shows the difference in yield between a 10-year Treasury bond and a 10-year Treasury inflation-protected security bond. As recently as March 2013, the yield on the 10-year TIPS bond was 2.6%, and investors in March 2013 expected an inflation rate of 2.6% over the coming 10 years. Here it is, 6 years later, and investors recently expected annual inflation of 1.9% for the next 10 years. Over the long run, economic fundamentals, like inflation, are a key underlying factor in the economy that drive corporate earnings, which in turn drive stock prices. In the context of the lowest inflation rate in many decades and low inflation expectations for the decade ahead, economic fundamentals are strong. Confirmation of this strength came on Friday. The index of U.S. leading economic indicators, reported by the Conference Board, ticked up from its already historic recent highs. No one can reliably predict the market's next big move, and past performance is not indicative of your future results. Stocks are only one asset class in a long-term, strategically designed portfolio. And stock prices don't always reflect fundamental economic trends. But over the long run, economics and facts matter.
Thank you for listening. Please contact us with any questions, and also contact us if you're interested in our complimentary second opinion on your investments or to set up a meeting regarding your wealth. Don't hesitate to share this video with people who might benefit from our work. Thank you again, and have a great day.